Hello, folks. Brandon Chapman with you for a Theo Night video for Monday. Man, is it April? We're getting into the end of the month here for April 22nd. But man, the ES ultimately ended up rallying on the session, faded before the close. The title of today's video is Stocks Pump as Gold Dumps Ahead of a Big Earnings Week. And it's one of those things when you think about the market selling off as it did. Clearly, we were at oversold levels, right? Friday faded in glorious fashion as we traded significantly lower, rallied off our low a little bit, but ultimately showed just the overall weakness that rallies are being sold. Well, today we kind of gapped open on the overnight session on Sunday. We saw a rally in the S futures, and as we look at the cash session today, vis-a-vis the SPY, you get a sense of how things kind of opened and ended. We didn't finish that far off of the opening price here, but it was a significant gap overnight from last Friday's session. But notice this, we collapsed towards the close if we look at intraday chart here, and we actually finished below. If we go back to the daily chart here, we finished below the high from last Friday. So now all of a sudden we're in a position, right? We're certainly formed a higher high today and a higher low versus Friday, but ultimately end up finishing within the range. And we're setting up this week for for some big potential volatile moves as a result of significant companies announcing earnings this week. And so when you think about that backdrop, it's really hard to be super excited about today, because when you think about it, who is the buyer of last resort? When the market sells off like it has, who's the one that steps in and buys when people are selling towards the end of a move? And that is who? It's the short sellers, right? The shorts are feeling great, and eventually they begin to take profits and they run for the door. And I think we saw a desire to not be long going into Friday's close. Thus, we sold off. But all of a sudden, we saw today, ahead of earnings, there's a scramble to take profits. And you notice the top performing sectors, financials were up nicely the last couple of days. Staples, not exactly a technology, right? That's the opposite. It's very non-cyclical versus highly cyclical. Technology actually finished about fourth best in this sector performance levels. XLU finished up 0.92%. So we have this kind of quandary. Well, do we treat the rally in technology as being, hey, this is the beginning of a major move? Do we take financials? Well, financials, we've had several days of positive movement here. How much gas does it have left in the tank as we're now moving through earnings season for financials and transitioning to technology and communications companies, energy? So really, we look at these two sectors right here and say this was not exactly the most bullish day out there. Materials stock basically unched. Communication stock, which includes Google and Meta, almost unched on this session. So it's a very hodgepodge day of short covering rallies likely occurring in technology today to kind of hold it off. You look at NVIDIA up 4.35% today. We're basically in the middle of the range from Friday's sell-off and significant breakout. And so we think forward this week, we realize, look, today is somewhat of an aberration, and realizing this is a short covering rally. We'll see whether or not it has any legs. But again, earnings is going to be a big deciding factor for that. Now today, not much going on in terms of on the earnings front. Verizon, though, gapped open and that door was closed. So a major reversal, a massive kind of long shadow. I mean, something upset the apple cart there, but Verizon doesn't impact the market greatly, but it does have a factor or an influence in the communications sector. As we transition tomorrow, it becomes a lot bigger. We have Visa. Visa was up about 1% today. We have Tesla. Tesla announcing as well. Tesla was down. It's got earnings, which may cause this reversal or maybe not. Again, Tesla, what's going to happen there? Pepsi. Pepsi had a very strong the last several days. Pepsi's in consumer staples. That's an area where you are seeing a bid under the market, right? Where you are seeing rotation towards staples and towards utilities. That's more of a function of saying, look, we're not selling everything. We're just rotating towards stuff that is more defensive, less cyclical. Wednesday, we kick it off with Meta, right? We have Thermo Fisher, TMO. We have IBM on the list as well. All the kind of major support levels there. ServiceNow, again, another semiconductor stock, and LRCX. Lam Research taking on the nose here the last little bit. AT&T, we gapped open this morning, sold off as we're kind of dealing with Verizon's news. Again, they're going to have their own news coming up here on Wednesday. And of course, Boeing, which has had a litany of issues, just continues. Their earnings call may give you some guidance there. Plus, again, are they going to talk about many of the issues during the conference call? Thursday, Microsoft. Microsoft saw some significant negative revisions in the last week. The stock's, certainly seen some downside price action. Again, if they come out, do they beat? Do they gap back up to the prior highs? Again, this is the biggest market cap stock in the market. It's going to have some degree of influence. Google is set to announce on the 25th as well after the market close. Google's earnings have held up, but the interesting dynamic here is that if we go back to the same quarter a year ago, $1.17, you consider the share price. The share price is up 50%. The projected earnings are only up about 35%. So what we've seen is multiple expansion, even taking into account the higher earnings expectations for Google. So no major revisions for Google, positively or negatively, in the last 90 days. We're just waiting to see what's going to happen. And the reality is the last earnings did not exactly provide a big vote of confidence, even though we've surpassed the gap down, the high of the gap day back here from the 31st of January. But just remember, the expectations going into this quarter are a bit higher than we've seen in the recent past. And so Google here, we've had two major gaps down in the last two earnings reports, a big gap up in the report before that, no gap before, I think, on the one before that. But point being is that there's strong potential for volatility with so many companies announcing. And also on Thursday, we got Caterpillar, we have Intel and INTC as well. And then Friday, we're starting to see the energy sector start to kick in with Exxon. We've got Chevron in the mix. They've had some strong couple of days here off of those lows. Colgate, Palmolive, and again, another energy stock. This is a refiner in PSX. So again, we're seeing strength in energy. We're seeing strength in consumer staples. Starting to see a little short covering in some of the more beaten down parts of the market. But just remember, we've also got inflation data. There's a lot of stuff. Advanced GDP, major lagging indicator, but it could move the market. PCE's personal consumption expenditures. It's the Fed's preferred measure of inflation. There's a lot of stuff that can happen. And with all the defense spending, the shipping money to Ukraine, for example, what's going to happen on the front of debt and what's going to happen with interest rates? If we start to break out here, this is going to be negative for the market. It's going to be negative for gold. And gold is experiencing that weakness today as it dropped about 2.5%. Silver down almost 5% today. I talked about on the 8th why you should consider taking profits. I kind of addressed that all last week, some reasons why with a lot of these gold and silver stocks take profits. What we're seeing today with gold is the fact that the dollar is actually strengthening in real terms. So when you look at $ DXY, you maybe don't see this as much. We see the dollar being strong in the last couple of weeks. The fact of the matter is it's strong relative to other currencies. Today was the first day in a while where we've seen the dollar strengthen intrinsically, not just against other currencies, but against gold, for example, right? This shows that the dollar showed a lot of strength today. The S&P held up relatively well, but this may not be the perch that's going to sit on for long. If we start to see a major sell-off in gold and silver, the dollar strengthening in value, you'd imagine the market would succumb. And that's the big thing that I've been waiting for, is saying, when does the dollar strengthen and we start to see some bigger selling in the market? We saw dollar strengthen today against gold. Again, is that a precursor for what we're about to see as the market pushes lower? And again, that's going to be part contingent on some weaker earnings coming out from some of these big name stocks that are announcing this week. As we look at the VIX, The VIX itself saw some selling today. That we're down about 17 right now. Again, I like to look at the ratio of the 3-month VIX to 1-month VIX. We saw, generally speaking, this ticked up to about 1.04. Point being is that the 3-month VIX is only about 4% higher than the spot VIX. Okay, so we're talking low levels. We almost crossed below 1, which is a bullish indication. So again, I don't think we've fully unwound the market here. I'm not sure we've seen enough breadth of selling to really provide that major durable bottom. And this is kind of a reflection of that. And again, we're seeing today is that this ticked higher just because the 3-month VIX and the VIX both were sold as volatility declined. But guess what? We're not going to have today's value for skew, but on Friday, we saw that amidst the selling at the end of the day, skew ticked higher, right? We went up for about like 131 to 133. Again, when you see the kind of fading into the market's close like we did in the rise in the VIX, you should see that the skew is falling. You should see that the hedges are being pulled in terms of we're either pulling hedges or we're not. We're basically just buying puts. But what we saw is skew ticked higher. And that means what? They're buying puts, but they're also selling calls. So yes, volatility went up, but we're seeing this kind of balanced hedging approach suggesting that they just don't feel it's over yet. And again, nobody knows the future. But again, we look at the SPX. We can say today's rally that fizzled a bit, ultimately finishing up about at 1%, 0.92, 0.870 like the SPX. This could be an aberration, and the earnings could really cause that next leg lower. So you got to be prepared for that. If you've been hedging, you probably want to consider keeping those hedges on, but you might consider rolling them. If you bought puts, roll them down. If they're in the money, roll them to out of the money again. But keep them in place in case this next leg starts to materialize. We start to see some major selling in the broader market. Now, in the near term here, certainly there's a window that may open before some of these announcements happen, and they may not come out negative. But if we look at Bitcoin /BTC, Bitcoin has stabilized last couple of days. It's higher today, and what we saw in the market, saw Riot advanced today about 23%, finished at the high of the session. During my time on the TheoTRADE chat today, I spent some talking, outlining some bullish trades on Riot and Mara. Mara did not see the amount of upside. That's not necessarily a bad thing. They both have similar amounts of short interest, about 15-16% of the float. The short ratio, which takes the number of shares short, divides it by the average volume. It says how many days it would take to cover. It's a little bit lower in Mara. It may not be as impactful, but the reality is a 23% move in Riot. If Bitcoin holds up, Mara may have a chance to really make a bigger move here. And I like them better than BITO, because of the fact that they are stocks and they have high short interest. And the great thing about this, and with Mara, for example, same with Riot, it's current week type activity. You can see all the big volume out here kind of picking up even at the $20 strike price. Again, this creates gamma potential, right? A potential gamma squeeze to the upside. And the big thing about this is that, look, the positive skew, let's go out here 25 days. Notice that the volatility is rising as you move out of the money. 108, 109, 110, 111, 112. On the put side, it's falling. And so the great way to be able to do this in a defined risk fashion is just buy a call spread. If you think that Bitcoin's going to hold up here and rally with kind of this broader kind of short squeeze rally that we have leading into some big announcements, again, 25 days out, again, rising call volatility. This tells, hey, look at doing a long call vertical. If I do a buy deep and wide 1 month 4-strike vertical, this is a 64-cent debit. That's your risk. That's your total $64 a contract risk, $136 of upside, $1.36 per share. Again, if you could sell that for about $1.20, $1.30, you're sitting very nicely. And you look at $20 here. Well, where's that in reference to Mara? That's not exactly a major move We're up $1 today. That's about $2.50 to get to 20. Again, if we mirror what kind of happened with Riot today, Mara could hit that potentially tomorrow or within a week very, very easily. There's 25 days left there. Even if you go out, for example, let's go out to May 31st expiration. Same expiration. Look, the debit's 63 cents. So you can buy more time and you're not penalized. Why? Because now all of a sudden we're getting beyond the earnings out here. 31, and the skew is even steeper. And so it creates a cheaper environment. So you get more time for the move to happen for about the same price. And again, get to 20, 21, 22 in this area. You have a chance to close it out relatively quickly. The shorter amount of time for just the 25 days right here for May 17, that will just expand a bit more quickly towards that profit target. But again, both are shaping up well or positioned well to benefit by a near-term rally in Mara. Again, you could do the same thing on Riot or Byte. But again, Mara holding back today just looks like it has a greater potential to break out here. But again, the earnings are coming up, as you may want to be aware, May 9th for Mara. We look at SBSW, Sibanye, right? This is a junior gold miner. It's been falling back the last several days. And today on Sibanye, we saw May 5 expiration in here. Sorry, May expiration, the $5 strike price right here. Some puts being bought, right? So we're seeing some bearish activity. Now, here's where I'd be careful. I do think the dollar's poised to start to strengthen, and that may contribute to a bigger sell-off in the market. But here's the deal. We could readily see gold start to shore up quickly if we start to see the Fed, despite maybe higher inflation, if they are willing to cut rates. So right now we're seeing that kind of reversal from being accommodative, looking to cut rates 3, 4, 5, 6 times this year to now maybe one time. If that starts to lean back towards that kind of dovish stance, gold could readily pick up. So I'm not a huge fan necessarily right now of wanting to be short gold or gold stocks. But again, you can see here with Sibanye, Stillwater, that $5 strike price being bought today. Again, could be just a hedge for a long stock. We may see a pullback to 4, but I think right now with a lot of this stuff, just holding back and looking for that bullish entry, not too dissimilar from what happened in energy. So energy's got a nice bid the last couple of sessions here. Again, Exxon and Chevron announcing at the end of the week along with PSX. Again, as I talked about last week in my daily session, is saying, look, just because there's some bearish activity up here doesn't mean you want to short energy. You might just be looking for the sell-off and looking for an opportunity to bid. That's what's happened the last couple of sessions here for XLE generally, of which the biggest holding is Exxon, and you got Chevron in the mix there. Again, both have earnings this week. And with oil prices, if we look at /CL, oil prices saw a big pop on Friday on the news of the bombings, fell back a bit. Today we're holding on. But when you look at the product depth chart here, I mean, you look at this term structure and you're like, wow, I mean, this thing is like very steep in backwardation. And this just tells you what? That the price risk is to the upside. That these back months are trading at a lower price. The risk is they push back up to the spot. And so again, the term structure is very favorable for taking a bullish stance in energy. We'll see how the higher oil prices are benefiting energy stocks this week in terms of Exxon and Chevron, and whether or not it's hurting refiners that buy oil and refine it, and whether they can pass it on to consumers. But again, we may be poised for a significant rally back to 88 in CL. The backwardation makes USO reasonable to trade. You can see we're digging in here. A near-term target about 82.50. But again, everything's kind of hinging on the economic outlook. It's hinging on the dollar specifically. If the dollar continues to strengthen, the near term may be relatively ominous for oil as it continues to sell off here. We're just waiting for that moment because, again, the supply term structure reflected here in the backwardation of oil just says, look, the risk is to the upside in oil prices, and so we got to take close note of that. Really hard to short oil and oil stocks when you have oil and backwardation like this. So again, just be careful. Look for an opportunity to potentially get long if you want to get long something. And again, we're looking for gold maybe to firm up here, but we may see a little bit more downside if the dollar strengthens some more. Again, don't buy into too much what we're seeing in here as we have some big earnings coming up. And the fact of the matter is XLF, well, it's been the best performer on the day. It's been the a third best performer on the week. The fact of the matter is we're maybe getting to a level where it's probably reasonable to start to go bearish again and to buy potentially a put vertical. We kind of did this back here in the break. We got out of it. Looking for to probably take another shot at it. And we did so last week with KRE, and it's reversed the last couple of days relatively strongly. But we've seen these reversals before. These create opportunities as the interest rate picture is very opaque. Bond yields go higher, prices lower for treasuries. It just expands the losses for these banking stocks and just creates further issues for them. Anyway, folks, that's the video.